Good morning. I'm April Chadwick.
And sorry about this. Good morning. I am Diane Gertis.
You know what? Every day is a challenge. So,
It is.
I'm glad you remembered your name today.
Yeah, I did. That is true. I am in lending. It is a challenge. But,
And you
but
didn't lie about it.
yeah, no. So it's another day in Phoenix. It's June. And for all those that may be listening outside of Arizona, June is usually the hottest month here. And we're expecting 116-degree temperatures next week. And you're thinking, how can you stand it? Well, we go from air-conditioned car to air-conditioned house to air-conditioned stores. And the other is that finally our pools will be warm enough so that we can swim in it. That's the good thing.
That's true. We've had like a beautiful, for anyone that's not in Arizona, we've had a beautiful year, like beautiful. Um,
Spring, yeah.
and we haven't been able to swim, or at least those that are adults. Kids don't mind, but those that are adults that like me that needed it 78 to 80-degree weather or pool weather. So, but we have had a beautiful, but as you said, June is the hottest and this becomes our winter. I always say for people that are and live in really snowy climates, this is our winter.
Yeah,
So,
but we still can get out in it and we can still enjoy the mornings and the evenings. That
absolutely.
that is one thing. So a couple of things I wanted to go over before we get into, we're going to talk about self-employed today. But just to kind of few things. One is Fannie Mae and Freddie Mac tweaked their automated underwriting systems. All loans that are below 548,200 for conventional loans have to go through the what I call the National Automated Underwriting System, but it's Fannie Mae or Freddie Mac. They've tweaked it, and unfortunately, not for the better. They've gotten a little stricter. So just kind of an FYI. If you are here, I've been hearing from my peers in other parts of the country that they are experiencing what we are. But as far as lending, one thing that we are experiencing, underwriting times are still really great, but the appraisals are taking a little longer. A couple of things for it is trying to, they are delayed in finding the comps for the price point that people are selling the houses for. The other is this is my theory, is that a lot of the appraisers are just burned out from after 2020, which I call a unicorn year for our industry, and just are taking it a little slower. So we've found that we're having to pay for more rushes, which are not pretty, in order to meet the timelines. And in order to compete with cash offers, we've had contracts come in that want to close within 2 weeks, which is no problem if you don't need an appraisal, needing the appraisal when it becomes an issue.
I
So
just
just
think
that.
it's so interesting though, because, at one time there were so many appraisers and, like, and then now with everybody, the whole country has an inventory issue, but especially us with our inventory issue. And then there's no appraisers. So at one time we were saying, oh, it's COVID, it's this, but now I guess you're right. Because I've been trying to figure out where, instead of the song, where have all the cowboys gone? Where have all the appraisers gone? But
Yeah.
they're very sparse.
Yeah, well, they're sparser, is that a word? But than they were, or they're out there and they're just not, they're just taking, they're not being able to, flip those appraisals like they used to. And for all those that you know that, oh, I know we've talked about this before on appraisals. It is not the lender's fault. We have nothing to do with the appraiser. I had one this morning that they wanted to rush appraisal, and the I got a text just now. That's why I'm having to do my Zen. After doing the rush, the listing agent calls, the appraiser wants to come out on Saturday, but that just isn't convenient for the sellers. So could you call him and see if he can come out another time? No, I don't do that. It's through the appraisal management company, and the sellers will need to call them and reschedule, which, by the way, the appraiser laughed because he's already moved on. So just saying. So as a lender, I do not call appraisers. I call the appraisal management company, and they are the go-between. So I'm done now.
Well, and I think today we had mentioned that something that both you and I are, we're going to go over self-employed people, correct?
Correct.
Right. It always has a lot to it.
Well, and I don't want to make your eyes bleed or cross or make you fall asleep, any of that. That's not the purpose. But self-employed, think of it this way. Every single company in the United States was started by someone, and they are self-employed even today. So corporations are owned by someone. Everyone has an owner, has ownership. Self-employed can be from an independent truck driver. It could be to an independent medical transcriber. You can be self-employed is if you, a lot of people who, what am I trying to think? Real estate agents are self-employed. So the guidelines on self-employed are different than they are on if you were a W-2'd. Self-employed also encompasses 1099. So I've had clients who worked for pharmaceutical companies that were W-2'd, and then they decided to start 1099ing their clients. If you're 1099, you're self-employed. So there's so much that goes into it, and I'm going to try to just give you the meat and potatoes of it. So not to offend you vegans out there, but you know, just the gist of it, if you well. But it's on a self-employed, whether you're a sole proprietor, an LLC, or a corporation. S corp is our most popular in our industry. They look at the net, and the net is what your income is based off of. Let's say you make 500,000 a year, but you net 60, and which means you probably have a really good CPA. But that 60,000 is what we're going to use. And speaking of CPAs, anything I say, check with your CPA.
Exactly.
I'm only giving you my opinion from the lending perspective. So check with your CPA. But there is then I've heard people say, I'm self-employed, I can't get a job. Well, I'm not a job, but I can't get a loan. Well, so I repeat myself. Yes, you can get a loan. We do many self-employed. But if you're a real estate agent, and let's say you made 100,000, you get net, I'm sorry, gross, but you write off, which you have a lot of expenses, and you write off your signs and your education and any meals, you write it off and you net 25,000 because you don't want to pay a lot of taxes. Unfortunately, not paying a lot of taxes and buying a home do not mix. So you're going to have to show income in order to qualify for a home.
Unless you're those, I guess, and have a lot of cash.
Yeah, And if you're self-employed, let's say you're an independent, you own a trucking company. Well, you may have a lot of what we call, well, if I could think of the word, just give me, not deductions, but I'll think of it in a minute.
Write-offs?
Write-off, well, not write-offs, but where you like have a truck and depreciation. There it comes. You may have a lot of depreciation. Depreciation can be added back into income. And also highly recommended is if you are, even for real estate agents, I'm just using that as an example, if you are self-employed, let's say you have an LLC or an S corp, is to take out some W-2 income. Therefore, you have taxes. That W-2 income can be used as income, as well as the net amount that you are paying your taxes on. Very elementary, but that is the basis of it. There's so much more. But one thing I'm going to use that April used all the time is that remember the law of twos. FHA and VA are going to require 2 years of tax returns, and they are going to average them. But if you had a really good 2019 and a really bad 2020, you may not qualify. You have to have a very good excuse. And also, the rule of twos is to be self-employed, you have to be self-employed for at least 2 years. and have 2 years of tax returns, typically. There are exceptions to that. For instance, the pharmaceutical, if you're in the pharmaceutical industry and you were W-2, then became 1099, and you filed 1 year of tax returns and you're 6 months into the second year, we may be able to get an exception, maybe. But again, but if you were a teacher and decide, hey, I'm going to become a real estate agent, you're going to require 2 years of tax returns in order to get an approval. For a conventional loan, some of the time, depends on the national underwriting system, you may only have to provide 1 year of tax returns, the most recent, but you still have to have been in business 2 years. If you're doing a jumbo loan and you're doing a traditional jumbo loan, you will need 2 years of tax returns. And there are no exceptions on jumbo loans. So, and if I am, I know I'm giving you a lot of information flying at you, but let's say you're like, well, goodness gracious, I'm never going to qualify. You know, I only make like 20,000 a year. Or that one tax return, April, I showed you. I mean, this is within, you know, it was her client. Had a loss of 100,000 and had no equity in the business. You're not going to get a loan. Right. But there are bank statement programs. They're called non-qualified mortgage loans. So they're completely not Fannie, Freddie, FHA, VA, traditional jumbo. But those, you think, okay, I'll do that. Well, those are more difficult to get than just the traditional loans. The bank statements, you can't just have gotten one big deposit for 130,000 and go, ooh, I make 130,000 a year. Those bank statement programs, the non-QMs, and keep in mind, they come with a higher interest rate, much higher down payment, but what they want to see is consistency in your deposits in your business.
Well, and also from what I remember on the bank statement programs, those are under a lot more scrutiny than just a regular loan.
That's correct.
You know, a lot of times we're like, I'd rather do that than, you know, than have someone go through my tax returns and all that. Well, they're going to analyze every single thing that you do. So they're a lot, like you said, they're more difficult to get through and they have a higher interest rate.
Well, one interesting point that, thank you for reminding me, is that let's say you do your tax returns and you bring them in to the office or whatever, however we upload them to us, as well, most of them. And you think, hey, cool, I made all this money. You know, I just wrote it out and I made it. And well, the other piece of it now is that we, as lenders, we're required to validate all tax returns through the IRS. And just in recent history, we had one very nice man who brought in his tax returns. He did qualify. And then when he got to the IRS form, it's called the 4506C now, he had to sign to give us permission to validate his tax returns. He goes, well, what's this? Well, we're going to validate your tax returns. What? Yeah, we validate all tax returns. So what you give us, we have to validate. It's a checks and balances system. Oh, well, may I have my tax returns back? So just an FYI. Oh,
just print something off and then just
you know what? Let's just cancel. Let's pretend like this never happened.
I'll be back.
Yeah. Anyway, so that's kind of the nuts and bolts of it. There's so much more that go into it, and some individuals have very complicated tax returns, and I'm not trying to make light of them, but that is just a simple part of it. And just keep in mind, you need to talk to your CPA on any time. And I work with a lot of CPAs, and we converse back and forth, especially on the more complicated taxes.
Well, I think that was perfect, because I think a lot of times people just self-employed. What you said today was very, not that I say basic, but it was to the point, and very much some questions that people may have that it gave a lot of info to that. So, and of course, call your CPA.
Yeah, call your CPA.
I have one more question for you, Diane, and I know this is kind of, you mentioned it earlier, it's not about self-employed, but with our market, well, with the nation, but I'm just going to go with Arizona. Do you feel, and this is off of you feeling, not knowing, and you can say, I don't know. But do you feel that the loan limits will rise by a large amount in Arizona at the end of the year?
They're gonna rise across the United States.
Yeah.
That's done.
But do you feel in Arizona as well? I mean,
yeah.
like, well, like to fit in, like, as you know, in our market right now, FHA, you can't.
Yeah, it's
because-
going to be, it's throughout when they raise the loan limits throughout the United States, it's all done based on the medium sales prices of the homes, and they are going to increase in December throughout the United States. FHA will increase. VA follows pretty much. Well, VA is zero down. We do zero down on VA up to 2 million now, which is incredible. But FHA conventional, of course, VA follows conventional. Those will all increase in December.
Be interesting to see what they go to.
Yeah, but I will tell you this: the jumbo rates have been awesome lately. So
wow.
they are not as there's not the difference between jumbo and conforming rates as there once was.
Oh, okay.
That's
Yeah. That's great for our market too. And anyone need to know that, like, don't be hesitant because of the sales price if jumbo loans and the rates are that good.
Correct.
Awesome. Well, thank you for that information.
My pleasure.
And thank you everybody for joining us. Once again, you can subscribe to our channel. Diane, she's, as I always say, the best in the business. If you ever need to reach her, her phone number is 480-235-5667. And if you ever need to reach me, April, as a coach or anything else, my phone number is 602-740-5319.
And everyone keep cool out there.
Stay cool.
Stay cool.
Bye.